Hello, in this video today, we're going to look at the top 3 powerful reversal pattern in technical analysis. In other words, this is in the Forex market. My name is Sewan Kambo Isma. I do welcome you back to my YouTube channel. I again do thank you for liking, sharing to our other social media platform. Please keep doing it. May God really bless you. Well, let's start with what are reversal patterns, and mainly what literally happens when the reversal patterns are to actually give us a perfect signal to buy or to sell the market, and what are some of the things that we should at least have in place for us to now can tell that, you know what, this is a perfect reversal pattern, and so on and so forth. Well, first and foremost, a reversal pattern like the way you hear is actually a transitional phase in the market that is literally telling us that there is a change in the market direction. For instance, if the market is going up, there is that transitional phase, literally which I call a formational structure in the market, formed by probably the candlesticks or any chart type that you're using in the market, that will signal to you that there is a reverse in the market. In other words, a consolidation, a change in the direction of the market with regards to the previous direction. Like I was telling you, if the market is really to go up, and we here at the top, we actually have a reversal pattern, which we have said it's a transitional phase. In other words, this transitional phase or formation or structure is telling to us that, man, if you have been in a buy position, or if you have not been in any position in the market, that at least it's actually signaling to you that any time from now the market is going to come down. So we find them of higher importance, reason being they're in position to tell us where the market is going next. And the main reason as to why you're in the market, as to why you are trading, as to why you are Forex trader, as to why you're participating in the Forex market, is that you actually need to find techniques, need to find strategies, need to find reasons as to where rather the market is going. And then if this is what these reversal patterns are giving to us, then we find them of high importance, and it's actually very helpful and useful knowing how they work and how to use them, because at the end of the day, they are showing us the future prices, which is the reason as to why we are trading. Well, for those of you that really don't know what reversal patterns are, they are the ones we're actually going to look at in this video, and I believe by the end of this video, you'll be in position to know what reversal patterns are and how to trade with them, and probably know when to enter the market, stop loss and take profit, risk management, money management, and all that, regarding also the time frame, which pairs, rather which instruments are better to be traded when we are using the reversal patterns. First and foremost, the most powerful 3 reversal patterns that we're going to look at in this video. One is the head and shoulder, that's plus also its inverse. Then we also look at the double tops and also the bottom. Then we thirdly or lastly we look at the triple tops and also the triple bottom. That makes the third most powerful reversal pattern among the patterns that we'll be looking at. First, I want you to look here. If you can see this is what we call a head and shoulder reversal pattern. So like I told you earlier, these are relatively transition phases or transition formations, structures that literally show to us where the market is going. Now, when you come across such a formation in the market, it's literally telling you that, man, the market is going, if like for this case, it's telling you the market is going down. That's if you're having a prerequisite, or in other words, it's a prerequisite for any effective reversal pattern to have a prior trend. So in other words, for you to or to make this effective, whatsoever that you're seeing on our chart, for it to be effective, for it to be referred to as a reversal pattern, it has to be with a prior trend, because a prior trend is a trend. Like for instance, if I can show you from our graph, if this is to be our example, we should at least have a move. You see where this is coming from, okay? It should at least be having a prior move. In other words, it should have an upward movement, okay? That it is at least efficient, that is at least strong, with a minimum of at least 10 candles, okay, or 10 candles or more. If you're having 100, well and good. If you're having 30, well and good, but then at least they should be 10 and more. Now if you're having a prior trend and you have such a formation, okay, the reason as to why they call it a head and shoulder, it's because it's actually named after the human structure. In other words, if you can look at it, the middle thing is referred to as the head, and then the two shorter heels on the left and right referred to as the shoulders, as this formation, as the way you can see. So this is a head and shoulder. Then if you can look at the head and shoulder, literally what we do, we draw what we call a neckline, okay? This is the line. This line is referred to as a neckline, and literally you have to make sure that you join. This line should touch at least at this point and also this point. In other words, it shouldn't necessarily be a horizontal line at 0 degrees, okay, at 0 degrees. In other words, if because at some situations we will find this slightly lower than this, your job is just to join them and extend these lines to the end, or towards the end. Then when you draw that, the reason as to why we draw the neckline, it's because the neckline at this point, when the neckline is broken, like let me get a different color here for my pen, like color blue. So like at this point, when this neckline is broken at particularly this point, then this is when we initiate our selling position, or we position ourselves for a short, okay? In other words, it's literally like a breaking point. It's literally working as like a support. So sometimes when you draw it, it's going to be horizontal. Some other time it's maybe, you know, trending, like we're going to see in this video. So when you draft this, or if this becomes your entry, we actually make sure that our stop loss is actually half the distance from this peak to the highest peak to the neckline. So we measure this distance. If let's say there are 10 pips, we divide them by 2, which is 5, and then at that point, that's where we position, or we put our stop loss. Like for instance, if this is the 50 line, it will mean this is going to be our stop loss, and then 10 is actually drafted downwards as our take profit. In other words, so if this is where we put our stop loss, we get this distance and we draft it down to be as our take profit. In other words, we expect the market to move down the same distance as from here to here. So this distance, if it was 10 for our case, remember our stop loss was at 5 pips, and then our take profit is actually going to be at 10. So basically that's some of the few things that we should know about the head and shoulder. And something else that you should note is when you're trading the head and shoulder reversal pattern, what you should at least bear in mind is that you should always make sure you don't trade it in relatively smaller time frame. So it's effective to find such a setup in a 1 hour time frame, okay, and above. So if you find it in a daily chart, that's well and good. However, such formations are hard to find They are rare formations to find as compared to the double tops and the inverse, that's its twin, and also the triple top, like and it's probably its twin, that is the bottom, the triple bottom. So these ones happen so many times as compared to this. This is rare. Okay, there are a few scenarios whereby you're going to find this, but mind you, when you find it, it's going to be a yielding point for you. I think that's one thing, at least, about the head and shoulder as a reversal pattern. Let's get to another reversal pattern as I'm rubbing this, which is for this with this case, which is the opposite of this, and it actually operates which is the opposite of this, which is this. It's the inverse head and shoulder, which also applies to the same, but this time round the other one was showing the market was reversing in a downward market direction, and then this one shows the market is reversing in an upward direction. That's why we draft our neckline above, and at this particular break, that's where we are supposed to buy. Let's get to the most powerful, or the second most powerful candlestick reversal pattern out of the three, which is the double tops. Well, interestingly or fortunately, among the patterns that we have, this one, all these happen so many times. Often the times you can't actually, it's rare to have an entire week -1. Okay, that is in a pair on average. So these ones happen so many times, and these can actually literally be gotten from 30 minutes time frame to daily time frame. But then these ones you can even go further to 30 minutes, which isn't the case with the head and shoulder. So these ones, just as the way you can see the double tops, we are looking at two heads, like you can see at this particular. This is head 1, this is head 2. It's not a must that they should literally be of the same size. Okay, it's not a must that they should be of the same size. They may be, one may be slightly higher than the other. Okay, like it shouldn't be accurate, in other words. So mainly these ones, you can get them in 30 minutes, 1 hour. Okay, yeah, these ones can be gotten often, so many times, and they are easier to spot. Well, only that with them, when we are trading them, we at least have to make sure that the neckline here is, the neckline is horizontal, is at 0 degrees. Okay, because at least we are joining 1 point, which isn't the case with the head and shoulder. With the head and shoulder, we're just looking at 1 point. Rather, with the head and shoulder, we're just looking at 2 points, meaning that whatsoever angle, provided these 2 points are joined, they are joined, then it, whether trending or at 0 degrees, that's it. That's a perfect neckline. We consider that a perfect. But then with this, we are joining 1 point, so we have to try to our level best and make sure it's at least at 0 degrees or horizontal. By 0 degrees, I mean it has to be horizontal, like it has to be a straight line. Okay, because we are touching to 1 point. So the same as I also told you to when it came to the head and shoulder. With this one, it's also a prerequisite that you at least have a prior trend, and this prior trend has to be with, it has to be long enough, meaning that at least it has to be long enough, because the longer the prior trend, what I consider to be a prior trend is this particular trend, okay, that we see. It's considered to be a prior trend. It's a prerequisite. In other words, this can't be a perfect, efficient, effective reversal pattern if we do not have a prior trend. So having an effective, long enough prior trend makes this reversal pattern more valid and effective. So it's important that we at least make that a priority for ourselves, because we consider, or we assume, that the distance covered by a prior trend, we also consider, or we assume it's the same distance that is going to be covered after the break point here when we are positioning ourselves for a sell. So mainly this is head 1, head 2. Mainly I think that's all we should know about the double top. And also when it comes to the stop loss, we consider our half of this distance, the highest, we get the highest peak, and then we consider that we consider its half as our stop loss, and also its height as our take profit downwards, or we draft it downwards, like we did to the head and shoulder. Then we can also look at its twin, or her twin, which is the inverse, the double bottoms. Okay, it's called a double bottom, which also looks like this. Okay, we borrow the same ideology with the same explanation that we did, only that this time round this is significantly showing us an upward market movement. Therefore, with this, we expect to buy at the break of this particular point. And also to supplement more onto our entries, at least we should bear in our mind that when we're trading these, it's important that we take pending orders, because pending orders, like for instance here, if you are waiting, or if you could be waiting for this market for a certain kind of probability to close, such that you can consider this a break, you would have missed out on this trade. But then if you enter with a buy, or a pending buy, that is a buy stop at this particular point, of course there is not any one way you can miss out on this trade. So for this case, this is a prior trend, this is the head 1, head 2, and then bottom 1, bottom 2, and then the break at this point, this making it our of course we are making this as our neckline. So that's all we should at least all we can say about the inverse head and shoulder. And then lastly, let's look at the last most powerful candlestick, or rather most powerful reversal pattern when it comes to technical analysis of financial markets. This one is called the triple top. The reason as why you call it the triple top, it's because it has gotten, when you can look, this is head 1, head 2, head 3. So it has 3 tops. And these ones, also we can have these in 30 minutes time frame, 1 hour and on. Okay, these ones are also common. And for this one, the neckline, it's supposed to touch, these 2 points. Okay, so it can either be trading or at 0 degrees, because we actually see it touching more than 2 points, which is this point and this, that make up the 3 tops, and hence it says that it's not supposed to be at 0 degrees. Okay, then we consider our entry at the break of this particular point. At this point, this is when we should actually sell, and then the stop loss should be consider the highest high of the highest peak, and then we divide it by 2, hence coming up with our stop loss, and then take profit. We get the number of pips of our highest high peak from the neckline, and we draft it this side. So if it is from here up to here that we have 10 pips, therefore from at this particular point, from if you're to sell at this point, then you also need to consider this distance to be of 10 pips as your take profit. So mainly basically that's how they're literally we literally, if you can understand one setup, the analogy, rather if you can understand the formation, the way you handle one pattern in a very understandable way, then you'll be in position to understand the rest of the patterns, and as they become easier and simple to trade with, because at the end of the day we are borrowing the same thing and we are seeing the same formations here and there. So lastly, let's look at the twin sister of the double top, which is the triple bottom. The same ideology, prior trend, three bottoms, breaking the neckline. It's a buy this time round. It's very simple, as you can see. So let's have a visit on our MT4 platform, and we see, okay, because this has just been, you know, a theoretical part of it. Let's just go to the real life trading, and we see how usually do these formations tend to happen, or you know, and all that. So let me get to my platform. So like for instance, if you can see this pair is Australian dollar JPY, and what we can see here is a double bottom. It's a double bottom. Like we said, at least we should have a prior trend, which is a prerequisite. Then head 1, head 2, then the break here. So it meant that you would actually buy at this point, consider your stop loss at this particular point, and the TP. You see, this was technically a real profit thing. Okay, so we see ourselves having head 1, head 2. So when you actually to come up with such formations, to easily find them, you at least make sure go to 1 hour time frame or 30 minutes time frame. That is for the 2. That is top, double tops, then triple tops or bottoms, and then zoom out the lowest. In other words, reduce your chart to the lowest. Then you wait for a certain move. When you have head 1, that's okay. Head 2, okay. So literally what happens is, if sometimes some people would rush even before this breaking the neckline that you've drafted, because at some point we also, if this one forms, there are so many chances, if it has not broken the neckline, there are so many chances that it may be a triple bottom. So you have to literally wait for it to break and then leave some small distance on a few pips from the neckline, and you buy, because it may also just reach at that point and goes back and makes another bottom, which now may be a triple bottom. So you need to be keen at this. Okay, you need to be keen at this. That's why I do encourage you guys to use more of pending orders than market execution orders. So this is one example. Let me I got another example here. Mainly the triple tops and the double bottoms, or rather tops bottoms, those ones are the easier ones to spot as compared to the head and shoulder. Head and shoulder, they are rare. Okay, I do recommend you guys, if you're to trade reversal patterns, make sure at least you trade them basing or having your main concentration at the doubles and also the triples, because the head and shoulder is, you know, it's a bit rare, and it's something that most people can't ideally wait to find. So another example is here, which is a triple bottom prior trend. We see our 3 heads and then the break of the neckline, which at the end of the day hits our take profit. So there are a couple of so many, but because of time, let's at least have those. I hope you really do understand. If you haven't and you need more to know about trading, price action, don't hesitate to contact us. Just go below this video. The contacts are there, the details, the address, everything is there that you need to know about. If you really need to know or contact or reach us, the details are down below this video. I thank you for watching this video. Hope you've really learned something and you've gained, and whatsoever that you've learned, make sure first practice it on the demo account. If it's really working out for you, then go on to a live account. Please use whatsoever that you've learned from this. Don't just keep it, and probably it makes you some money. Thank you so much. Like, share, click onto the bell, and also comment this video in case of anything. Bye bye. Allow me sign out. See you.